Ladies and gentlemen, welcome to another episode of Insights from Inside powered by iGCB. Today we are honored to have Raju Daryani, Business Head, Digital Core with us. Good morning, Raju. Welcome you to the show. So just to get started, what do you think which saves banks from being the next BlackBerry?
It's a very interesting question, Mithu. So what we're looking at is, see, most of these tier one large banks, they build the entire architecture over time, and they go very deep into different verticals. With that, it creates a myriad of solutions which are very hardwired, which basically means that when you are trying to move your entire solution to a different frame and a new architecture, that's going to be a serious effort and also cost as well as a risk. Okay, so moving that, and what has happened today, it's very clear with digital transformation and contextual banking, the banks have to be able to offer different ways of the business. They have to be able to please the customer and be able to appease them and give them the right solutions at the right time. That's a given. And these large banks are unable to do that or move as swiftly, or the agility is not there. Why? And why are they worried? They're worried because the new age banks, the fintechs, they're coming in, they're taking their piece of the market, or they're not able to expand. So they are getting stagnated. So these are real issues. And with that comes in the fact, like BlackBerry, when you had them, when up came the iPhone, and the iPhone went way ahead in terms of giving the experience to the customer, and BlackBerry soon and went outdated. I think that's the exact comparison that we can state is there.
And Raju, you deal with banks across the globe and especially developed markets like Europe and Americas, right? So you do feel banks are threatened there,
Absolutely.
right? So how do you think banks navigate these challenges?
Okay, so there are different ways different banks look at it. Of course, it's never easy to go and replace the entire core at one go. So there's always a challenge that we need to get to that next point, but they can't really replace. So what many banks are doing is going through a progressive renovation approach. So what do we mean there? Progressive renovation, we are saying, is that with all different areas of banking, whether it's liquidity, cash management, whether it's trade, finance, treasury, or the retail, corporate, these are different areas. Not all of them need to be replaced in one go, because a part of those are working and functioning fine for now. But what will really maybe missing is the retail capture of the market or the corporate capture, and the experience that the banks want to be able to provide or the customers are expecting, whether corporates or retail. That may be the key area of where the pain points are. So if you are able to take that and replace that in a very progressive manner, so you could replace, let's say, the experience first with the retail and go on and progress on the back office later on, that gives the bank an ability to be able to provide an experience quickly to the customer, as well as be able to look at then refurbishing the entire backend without having to wait for the entire time. So what that means is this composability aspect is very important. And then having a look at that from a vendor perspective, the comprehensiveness also should be there, because without that, then again, they are struggling. If they had other areas to fix, how do they fix that? So this is where we are seeing the key trends of what some of these large banks are embarking onto.
Interesting. In fact, quite some arrowheads from you. You spoke about experience quite a lot. So a customer experience, and that is bank's customers experience becomes the heart of your solution. Right. And some of the arrowheads that you also covered is comprehensiveness, and the most important that you highlighted, the composability. Right. So how do banks latch on to composability?
Right. So composability in what they do is the banks are looking at the factor, as I said, to replace certain verticals which are very critical in the beginning. So how does that work? So essentially what we need to do is be able to offer the banks a mechanism where they can just take the deposits or the lending, be able to plug it off and put in a solution which is going to be able to provide the right level of service along with the experience that they want to do. So if that part can be taken and unplugged and plugged in, then they are able to be able to move forward in the right way. So what that comes about is that how does one do that? Then the banks are concerned, okay, if I do that from an integration perspective, how does that work?
That does
So
become a
that
challenge.
becomes another challenge. So what we then provide as Intellect is we provide a mechanism of being able to fix that with our Blue Fabric. What we call Blue Fabric is where we are able to bring this integration in a very easy low code manner, and we'll talk about that in a later podcast, but that's where we see the entire thing moving.
So, transformations, hence, all right, while progressive, do carry their own challenges and, of course, fears that the banks still live in, right? So, how do we really make these transformations a success story, especially for the tier one banks who are still on legacy or looking, as you said, should consider progressive transformation?
Right. I mean, that's again a combination of what it is, right? If we are able to give them composability and the factor of they are not really, in a risk, the risk is lowered by the fact of having this blue fabric. They are able to see that very quickly. They are able to bring up this particular proof of impact, have a look at it and move forward. So that is one part of the puzzle, which is more of how the functionality and technical solution is. The second piece that we bring to the table, which is fairly important, is we look at it from a design thinking concept. So before we embark onto a project, we invite the key management or the stakeholders of the bank, and we sit and look at it from an end-to-end design. And we don't start a project until we have actually seen what is the end desirable. And if we don't do that, we don't embark the project. So with that, we get a clear concept of how we are going to be able to lay out the project, at what speed, what phases, so that we don't run into unknowns in that. And this is again an issue which banks come up with, right? Having gone with other vendors, they may look at it and start the project, but then projects overrun and then costs overrun. And I think in many of these tier 1 banks, the biggest issue is these overruns cause them a huge amount of pain, and many of the projects end up to be in troubled projects. So this is where we avoid all this and try and provide a smooth, with that confidence. When you talk to the C level, they sort of say, okay, this risk is a bit reduced. Of course, it's never goes away, but the risk is reduced, and therefore they feel, yes, this is a confidence level, we can move forward. So that's where we are.
I think that's a great point that you highlighted. And I think that just also brings us to the point what gives our customers a confidence on relying and banking on us for their transformations. Especially the buzzword that I keep hearing about is a co partnership, co creation, co innovation, right? So, you want to shed some light on that?
Yeah, so what we are what we've embarked on with some tier 1 banks recently is not to look at trying to just provide them with an entire mechanism of services from Intellect side. What we are beginning to do is form a center of excellence. We bring in personnel from the bank side, absorb them into the implementation team, and which then makes them as much of an intellect personnel, so they get all the knowledge, all the transfer, and then they go back to the bank at the end of the project fully powered, fully able to do. And because the architecture based on what we call as EMAC.AI, they are able to extend that in their way forward. So to give you a little bit of background of EMAC.AI, which is I'm sure would be your next question, is essentially is it's event based. So E for events, M for microservices, A for APIs because it's fully with API first mechanism, a cloud ready solution, a headless, and then we have added AI to it because we know the future is that everything AI is going to come into trying to how the experience will be improved, operational efficiency will be improved. So all these factors, we are embedding AI into each of this, and this is a process which is an ongoing process which we have begun and we will continue to move forward. So that's the entire what we spectrum that we offer from intellect perspective.
Great. And thank you for making it dummy proof for us all. My last question, is there any proof to the matter that you may want to discuss?
Sure. So in this case, I'd like to give you an experience of a bank that we recently signed up as of late last
A
year.
proud moment
A
for us
proud
all.
moment for us all, absolutely. And the bank was one of the largest banks in Hungary, and they would be, I would say, a systemic bank from Hungary perspective, because they had a huge, they had over 35% of depositors in Hungary. So looking at that, they did a very long evaluation, and that evaluation went over, I would say, around 15 months or so.
Wow.
Before they came into even nominating the final for a POC. So in that evaluation, what did they look at? They were looking under the cover, and they were trying to say, what is the architecture? Because if the architecture is right, they said they could expand and do what they feel like, because it has to be future proof. It can't be that I have everything today, because I can't imagine everything today. That was their view. They went ahead, they did a very thorough exercise, and then they asked us to deploy on the cloud, and they ran this with few vendors for a good 4 months before they nominated us as the key vendor, after which they did a POC of 6 months.
Wow.
Before they signed the contract.
A heavy
So
test.
you can see how we were tested, and a bank in Europe doing that. I think, and we coming out as winners, we think that's a proud moment, and that is the proof of what we just, we have just moved and launched EMAC.AI.
Thank you, Raju, for some of the great insights that you shared with us, and banks to watch out for what they could take up from it to make their progressive transformation a lot more achievable. So do reach out with anything that you would like to know more, and to know more what's baking at iGCB. Thank you.